I'm so sorry, guys. I'm so sorry, guys. I didn't know. I didn't unmute myself. I'm so sorry. I'm so sorry for coming. All right. All right. Let me start again. Let me start again. Let me do this all over again. All right. Let me start again. Like I said, from the beginning, I said that we already discuss uptrend, downtrend. We discussed that in our last class and we dealt with that very well. And you all said you actually understand that. So I won't be going into that. But yeah, I'll be talking about the XYZ pattern. This is the continuation of where we stopped. Now, this is the development of what I taught you last class. Now, look at this. When market is going up like this, it has created something like this, something like this, something like this. Now, as you've seen something like this, and you see markets go up like this again, you should be expecting market to come here to clear this low here and then come to this level here, down to this level. There's that rectangle to mark your entry at this low here. And then what do you expect market to do? You expect market to buy off, to bounce off from this area here. Do you get what I mean? You expect market to buy up from this area to at least clear this eye to break structure again. What do? How do you take your position? You take your long position like this. Put your SL below this previous low or relative low. Yeah. And you can decide to just target this eye. You can decide to just target this eye. Once you target this eye, you know that, okay, market is going to break the structure. If market is to respect this area, this place is buying from, it is at least supposed to break this structure to the upside. What do? You place your TP. Don't be greedy. You're in the market to make money. You're not in the market to just let candlesticks be forming and be forming and be forming. You're in the market to make money. So once market gets to this high, you take your profits and you close your position if that's okay with you. But everyone is different. You can as well just leave the trade to keep running and keep running and keep running. Choice is yours. Why? Because you are done placing the trade. So the choice is yours. So now, this whole structure, I will say it again. When market has created something like this, it has created this low here, created this higher high, this higher low, this higher high. Now, this is an internal structure for market to clear off, to come down, clear it off, and then activate an entry below it, rise below it, and then respect it. Do you get that? For market to respect it. For market to respect it. Now, after all that, let's head over to the chart to see if we can actually find something like that. Um, let's see. Let's look for an uptrend. Oh, this is downtrend, downtrend. Mind you, as a day trader, your higher time frame should be what? Should be 4 hours. Shouldn't exceed 4 hours. It should not exceed 4 hours. Your higher time frame should be 4 hours. Now look at this. It's not properly what I want. It's not properly what I want. I'm looking for something better to make it much more clear. It's not easy to spot it. That's another thing. It's not easy to spot it, but once you spot it, you know it is good. It is of good quality. Come on. Let's see. Mm, thinking it's going to be on an uptrend kind of thing. Not still giving me what I want. That's all. Okay, 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 okay. Look at this. This is a typical example. Now look at this. What the market do? Markets created this low, created this high, created this low, created this high, created another one again. Can you see? A double one. Now, normally this is where market is coming to. This is where market is coming to because you can see the weak rejections around this area. They are like liquidity for market to clear. Now, it created this high again, thinking, okay, once market gets here, people will trade ICT people, and people will trade all those things and all those things like that. Will trade lows, higher highs, and kind of things, or other blocks. They will expect market to come down to this level here, yeah, and then bounce off. But what will market do? It will kick them out. Same here again, kick them out. Okay, let's just probably say, okay, you also took this trade from this area. Let's say you took this trade from this area, and then you expect it to buy. See, trust me, if you properly took this trade, it won't kick your SL. Why? Remember I told you, let's say we took this trade from this area here. Just watch closely, oh. Watch closely. Placing your SL is also a strategy. It's something you must do strategically. Now, normally, you give your trade breathing space. Look at this. Give your trade breathing space. Don't put it immediately below this level. Put it immediately below this low. There's a high chance that market will clear this your first entry here and then activate the entry below here. Like that is what actually happened here. Do you get? That is what actually happened here. So you give your trade breathing space so that you won't get kicked out and market will still go your way. Do you get that? Now you place your TP at this high. And what did market do? Can you see? It's full TP. Once you spot this thing, trust me, it's a killer. It's just for you to spot it. If you can spot it well, trust me, you are good. You are good to go. You are good to go. You are good to go. Let's look for more examples. Today I only be dealing with the buys. I only be dealing with the buys. This is not something I would like because there's no proper structure for market to clear. But I'll probably take in here as my entry. Wait, what happened? Okay, they respect it. It's on a downtrend. Let's look for something good. Let's say which market is on a buy trend, buy trend. Okay, let's say XAU. Yes, should be able to spot it easily. Ah, look at this. Now, look at this. You need to be able to properly spot these things clearly. This is the low here. All these here are like equal lows. Here's another example coming. Let me show you something. There are sometimes that markets will do something like this. Watch closely. Oh. Create equal lows like this. And then clear these two equal lows and then activate the entry below here. Why? Because a lot of stop orders will be here. And then what to market do? Market to bounce off like this. And here, this is where the equal lows will be. They are called equal lows, where market is to, or relative equal lows. Do you get that? Or relative equal lows. Now let's clear this. Now, look at this. Look at what I'm trying to show you. Now, this is the equal low here, or relative equal lows. Now, what do you expect market to do? You expect market to clear it off and then activate an entry below this place here. You expect market to activate an entry below here. Very easy. And how do you place your entry? You place it like this. Remember, give your trade breathing space. If you cannot find a low for you to place your entry, just give it breathing space. Just make sure you give it a little bit of breathing space like this. You can target this eye. As you can see, you can target this eye or target this eye. Any which one. Do you understand that? Do you get that? So that's pretty much it. Everything I've showed you today, go back and back test it. That is the only way you can know all these things. That is the only way you can know these things. I've only showed you how it is done. The rest is for you to go back and back test it and own this skill. Do you get that? So now, do you have any questions? Do you have any questions? David, stop drawing on my board. Please, please, and please. Stop drawing on my board. Thank you. So if you have any questions, just ask. Just ask right away. Ask right away. Ask your questions. Ask your questions. We have questions. We have questions. Just ask. Just ask. Let's deal with it. So all is understood. If people understand everything, that's why there are no questions coming in. Yes. Yes, this is the strategy. What else? And we are not done yet. It's just one and one of it. Not like one of it, but everything is intertwined. They all work hand in hand. So calm down and learn. And as I have shown you everything, kindly go back to your chart and analyze and back test on your own. Because it is no use if I teach you all these things and You don't go back to backtest these things. It is no use. Go back and backtest these things. And don't worry. You are hearing me saying backtest and backtest. If you don't backtest these things, it will tell on your exam, because definitely there will be exams, and we'll be issuing out certificates for those who pass the exams. If you don't pass, we won't be issuing you a certificate. And trust me, these are certificates you can use out there to show that you've actually learned how to trade. You understand? All right. So that'll be all for tonight. Let me stop sharing my screen. That'll be all for tonight. Okay. No. In fact, okay. Out there, yeah. This is me answering David's question. There are so many strategies out there when it comes to trading the financial market. There are so many strategies. One cannot begin to start learning everything. Trust me, if you begin to start learning everything, you will implode. You will just implode. In fact, the lesser you know, the more consistent profit you will make. That's the true fact. That's the true fact. What I am trying to say is that we only trade what the market tells us. Yeah. What I am showing you is just basic market structure movement. And the moment you can understand it, trust me, you are good to go. You begin to trade in the flow of the market. You don't trade against the market, you trade in the flow of the market. That's what I am trying to teach you here. Do you get that? So I won't really call it a strategy per se, but it is also a strategy. Trading the flow of the market. Do you understand? So that's basically it. Yes, that's basically it. So you all should stay safe. And once again, I still remain Shadrach, the assistant lead analyst of Light Deals, also known as the Billionaire Trader. Thank you, and yeah, good night. Stay safe.